Hello everyone, this is Danny and welcome to today's edition. Been a pretty hectic day. I made one real money trade today. I traded Twitter calls at 10 o'clock. Pull that up and see what I saw. Twitter calls at 10:01 was my entry. We come over here to the 10-minute chart. We'll pull up the 3-minute also. Okay, at 10:01, I entered on the 5-minute chart. We came down here and touched the 100 simple moving average and followed that up with a bullish engulfing candle that broke just above. I'm not looking at the wrong time frame. The wrong time. It was this one here actually. We came down to the pivot point. Came right down to the pivot, almost touched it, had a bullish engulfing candle, and it was also right down to the 200 simple moving average, almost to the 200. So we had pretty good support there. I went in light, which I've been doing with this strategy till I'm more comfortable. Entered at 10:01, so just about here. I was actually looking for a pop above this pivot. I sold the first half. I had 4 contracts. I paid 52 cents. I was in for $208. I sold the first half at 10:19. So right at the end of this candle, so right about here, I sold the first half. One reason because it was 10%, and that's my initial target. So I wanted to unload some of my risk at 10%. We were also starting to get close to the high of the day. So I sold half of it. I set the other half. I sold one at 10:21 at 61 cents and 10:23 at 64 cents. So at 10:21, we were right after this candle opened. I sold one more, and the last one I sold, we actually came up and touched a pivot, which was my target. But the problem is, by the time I hit market sell, because it started pulling back, because it hit, and ideally I'd like to see it hit and pop just a little bit past it so I can put a limit order right there and get out. But it hit, and then it started to pull back, so I just did a market sell, and it sold probably about here, almost at what my target would have been. But to go back to where I screwed up here and I started talking about this entry, this would have been a good one also. We came down, touched the 100, and followed that up with a bullish engulfing, and it popped just through that pivot. So you could have used this bullish engulfing. Now remember, a technical standpoint, your stop out would be a close below this candle, the pair that makes that up. But to be a little bit more conservative, you could have put a stop right below yesterday's high, or maybe even this pivot. If you would have put a stop below this pivot, you would have actually stopped out right here. So when you have two stops that are, two support levels that are close together, you can use that as a range and call your stop below this. So you could have got in right here using this as support right in this range with a target up to here, and you could have nailed that one again. I actually got quite a few alerts for Twitter today. Here we had a bearish engulfing right at a pivot, so that would have been a good entry to short or go puts. Same with this one, another one right at a pivot, right at resistance, so that would have been a good play. If we take a look at the 3-minute, I got in at 10:01, which was just after this candle opened. So right about here is where I entered, probably right in this range when I entered it. I exited at 10:20 something, so I was exiting right in this area here. Take a look over here, see what that looked like over here. 10:01, I entered right after this candle opened. This wasn't technically a hammer candle, but it's real close to a hammer candle, and I wasn't entering based off a 10-minute chart. I was entering the 5-minute, but I like this candle also, so I felt good about the entry. That's why I went ahead and got in, even though it was such a long candle with such a far stop from a technical standpoint. My stop would have been closer to this level here, but it worked out. Made it average out to like 15.8%. If you add these up, divide them, it was like 16.5 cents exit and 52-cent entry. I paper traded Tesla right at the open, and didn't quite work out for me. It would have had I been a little bit more patient with it, but I didn't want to spend all morning monitoring and babysitting this paper trade, knowing I wanted to get in a real trade. So rather than sit around and wait for it, I just decided to get out. I got in at $5.10 at 9:31, and the reason I got in was we had a bullish engulfing candle at 9:25. I jumped in. I was up a little bit. It rode it up to here, and then when we got this candle, I got out. Obviously, if I would have stayed in a little bit longer, it would have ran up to here, and I could have made money on that one. But again, like I mentioned yesterday, anytime you enter based off of a 9:25 candle, you're going to have a bigger risk. The reward can be bigger, but the risk is also bigger. So you got to kind of balance that out. I paid $5.10. I sold it for $4.25. It was one contract. Even though it was a paper trade, it was only an $85 loss. With Tesla, that's $85 loss isn't bad, and one win on Tesla can get that back. I also traded Netflix at 10.37 for a small loss. Not sure what was going on with that one, why it didn't work out. But let's take a look at what we had. And I don't really remember this trade off the top of my head right now, so I'll have to look and see what we had here. I entered Netflix at 10.37. So and I entered puts. So my entry was right after the open of this candle. My entry was going to be based off of this bearish engulfing candle at a pivot. The problem was, and I noticed this at the time, was this long tail. I didn't like the long tail, but I went ahead and entered it anyway. And I just didn't get the follow through. It dropped a little bit. By the time I entered, it was about here, so I didn't get much of a drop. I was looking for a play down to here. I didn't get it. I stopped out right after we broke through this pivot. I paid $3.15. I sold it for $2.85. It was only one contract. Paper trade again, so I lost $30 on that one. Yeah, ultimately it would have worked out if I would have held it through all this, but I'm not that type of trader to hold through this. I mean, it could have ran to $400 today, and I'm stuck holding this bag then. So I cut my losses and got out. Yeah, right now down here I would have made money on it eventually, but I don't know that that's going to happen. So I cut my losses before they get too big. Jeff Williams from the Traders Council, one of his sayings is, all big losses start small. So just remember that. If you have a big loss, it's because you let it get that way. I try not to let my losses get big. Cut them short, cut them soon, cut them quick, get out, move on to the next trade. Take a look at a couple of other charts here. I haven't really looked at these charts. Like I said, it's been a pretty hectic day. I know I've got a ton of alerts today, but haven't really looked at them. Let's take a look at SPY real quick first. SPY, this here looked pretty good. We had a bearish engulfing candle right off of a pivot. The problem is, look how far away from the pivot we were when it triggered. So that would have been tough. I mean, you could have entered here. My target, I would have had a soft target probably right here. So I probably would have sold one contract here, maybe a second one here, and a third one would have probably been low of day. That probably would have been my plan for this one if I would have got in. I don't like, I keep saying this, but but I keep doing it anyway. I don't like entering that far away from your stop out. But I've been doing it, and so far it's been working for me. And that's one of the things. If you trade, let's say this. Let's find something a little bit better than this one. Let's go over to here. I'll find a better example for you. Here's square. Right here, bullish engulfing right at the open. And look at that big pop. That would have been a real nice hit there. I didn't trade it. I did see it, but I was busy with looking at other tickers, so I couldn't really get into this one. We have a bearish engulfing here. You might have got 10% out of that one. Now we're getting out. Actually, that was after 11 o'clock, so I wouldn't have traded it anyway. So that's square. Baidu. I'll try to go over each one of these every day, but I'm trying to keep the videos a little bit shorter too. Right here, let's give this as an example. Let me see how the 10-minute chart looks. Alright, here's one. We have a bearish engulfing candle right here. Remember what I just said about how far away you are from your stop? When you have a bigger candle like this, generally the percentages, the chance of it being a successful trade go up. It's a higher chance that this will be a successful trade than if this is just a short candle. The problem is your stop out is further away, so your risk is greater. So you have a bigger percentage chance of winning, but you also have a bigger risk if you stop out. If this is two small candles, let's just say these two here, you have a less risk if you have to stop out, less of a loss if you have to stop out, but it's also less likely that it's going to be a successful trade. And that's just in general. So it depends on your risk tolerance. I would still rather enter lower and keep a tighter stop, maybe have a little bit lower winning percentage with a tight stop than a higher winning percentage with a big stop. However, in a lot of these situations, my stop ends up being something other than, let's just say for example here, from a technical standpoint, your stop out is going to be right here, close below this candle, because it's the lower of the two that make up the engulfing pattern. But if I'm entering up here and I don't want to take the loss all the way to here, I'll use this. I think this was yesterday's high. I'll use this as my stop out instead of this. It kind of skews your numbers a little bit, but you're not losing quite as much money then. Let's move on to shop. You see all these alerts that I get popping up here. I also get them in text and email. And you can set that up in your thinkorswim. I believe it's up here. I think it's in setup, application settings, notifications. I don't want to click on it because it'll show my email and all that in there, email, phone number, and everything. So I'm not going to click on that. But I think it's under notifications here, and then you can enter your phone number and email address, and it'll send you alerts. So shop. Right here, this initially would have looked like a good entry for puts. Long tail, or long wick, and it was right at resistance, right at a pivot point. Bearish engulfing candle, but it didn't follow through. So that would have been a loss there. This would have been a nice bounce if there would have been some kind of reversal signal, but there wasn't. And now we're past 11 o'clock here. So that's it for shop. Twitter we already looked at. We'll take a quick look again because I don't know if we covered the... Yeah, we did cover it. We covered this entry and this entry. And also this one. That was after 11, so that wouldn't have counted. Baba. This would have been a pretty good entry here. We came up to yesterday's high, had a bearish engulfing. Target would have been down maybe here. My first target would have been this. I would have sold part of it here. So I probably would have sold part of it and taken a break-even stop on the rest of it. Wouldn't have made an enormous amount, but it would have worked. And we're past 11 there. Facebook. And remember, I only trade these till 11 o'clock. Until I find something that works, I'm not trading these after 11 o'clock because the percentages, I'll paper trade them after 11, but I'm not putting real money in these because the percentages just drop quite a bit after 11 o'clock. So maybe I need to look at a different time frame, something after 11 o'clock, I don't know. Maybe I need to go to the 10-minute chart after 11, 15-minute chart, I don't know, something, but the 5-minute chart after 11 just doesn't really play out. Facebook here, bearish engulfing. We're not really at any resistance points. This wouldn't have been a very good entry. You might have made a couple bucks if you would have played it to here, but they've pretty much traveled sideways, moved sideways all day, consolidated till here. This is after 11, so again, I wouldn't have looked at it at that point. Netflix. Let's take a look at Netflix. And I really hope you guys, I hope you guys are watching this, and I hope you pick something up. Even if you don't like what I do, hopefully something that I'm doing here triggers something and you use it. Because I really do like helping other people. If you've been in the Traders Council chat room, I've been a member in there about 1.5 years now. I'm always in there trying to help people. I shouldn't say always. Lately, I haven't been in there as much because I've been really busy with work, so I haven't been in there that much, but for quite a long while, I was in there all day long, and I was helping anybody that would ask. People help me along the way, and I'm just trying to pay it back. So I'm hoping you can pick something up that helps you. And if you do, I don't care if you do it anonymously. If you do, just put something in the comments. Hey, I picked this up and I like it and I'm going to use it. I don't care if you identify yourself. You do whatever, anonymous, whatever. Just so I know that what I'm doing is helping people. But here on Netflix, we had a bullish engulfing, and then it pulled back. From a technical standpoint, you would have been out at the close of this candle. But if you were brave enough to hold on, it would have worked out for you. 10:30. This is the bullish engulfing that I paper traded, or bearish engulfing that I paper traded with a long tail. Didn't work out. Spotify. This is the last one on my watch list. So Spot. We had I don't know what time. This is 4 o'clock yesterday actually, so doesn't really trade overnight. After hours. Right here, there's a doji and then a bearish engulfing. I probably would have thought this was a pretty good entry because other than this pivot, there's no support down below, at least till here, till today's open. But we had a doji followed by a bearish engulfing. Even though this is a small candle, it's still, we had 2 candles in a row that suggest that there's no steam. But then it popped. So, but look at this one. We have a bearish engulfing, This isn't quite a shooting star, but it does have a little bit of a wick on it. So that looked like it would have been a good entry for puts right here. My target would have been probably all out right here, because there's a lot of resistance here. I mean, a lot of support here. We had the 50, we had the 100, or we had the 100, we had the 200, we had the 34 EMA. So a lot of support here. I probably would have got out of all of it, or at least all but one contract right here. My next target would have been this pivot point. So that's about it for today. Like I said, I was 1-0 today, real money. I was 1-0 yesterday, real money. I was 9-2 overall before 11 o'clock. Before yesterday, or after yesterday. Today I was 2. Actually, no. Today I was 1-2. Both paper trades were losers today, before 11 o'clock. So I was actually 1-2 today. So now I'm 10-4 on this. I'm going to start putting this in a spreadsheet and tracking it. But 10-4, which still isn't a bad percentage. 10 divided by 14, still 71% winning percentage. That's not, that's pretty good. That's nothing to laugh about or joke about there. That's 71% is better than a lot of people, and it's working out for me. So, but that's it for today. Let me know what you think, and good luck trading, and see everyone tomorrow. Bye.